I'm there my 1000 day challenge. This is day 586, so let's get things started. Right, the banners might remain the same, like I mentioned. I'm not entering any trade right now, so the market to me still looks to be choppy, even if you look in terms of 4-hour or the daily chart itself, because there's conflicting signal, be it on a long setup or on a short setup. But of course, if you're day trading on the shorter time frame itself, you could potentially look for a nicer setup in that sense. All right, otherwise, if you look across the board, I do see a very nice pattern forming on the US market, which is actually a potential bullish falling wedge. So let me just go right over to there. So what I do see over here is very nicely, we got the first wave, the second wave, the third wave, the fourth wave, and now potentially the fifth wave has completed. But potentially what we do want to see is a break of this downslope trend line and also the 20 exponential moving average. If that happens itself, potentially I will be willing to get back in at a higher price near 44K region itself, because that will mean that likelihood this retracement could potentially have come to a short end. But of course, this could be a much, the first big retracement of the larger retracement itself. So we could have a weak rebounds and then continue towards the upside just as well. But I'm just saying that technically this formation do lean towards a more bullish formation if and only if it does breaks up towards the upside above this downslope trend line. Of course, that's not to say we cannot go continue towards the downside. So that's something to always bear in mind. So until this trend line has been breached, I will still lean towards a more neutral to slightly bearish kind of a momentum itself. Similarly, that's what you get for Nasdaq. So let's see how things goes. All right, and then for ASHR itself, like I mentioned, a consolidation over here and a break over here was definitely bearish. I did mention somewhere along here that if we do break up, that'll be great. If we do break down, there'll definitely be much bearish itself. And true enough, we're actually now extremely bearish, and I do see a potential support coming in near the $30 region itself. But of course, we could have some sort of weak pullback or retracement, and if it does happen, we could potentially have further sell-off just as well. But for me, I'm not heavily invested in terms of ASHR, I'm more towards the tech stocks for KWEB. So let's see how things goes. But similarly for KWEB, we can see that even though there's a huge there's a drop from this consolidation point, like what I mentioned, because KWEB tentatively has a much less room to drop simply because it already dropped very significantly from the all-time high, and the valuation for most of the tech stocks right now is nearly near the rock bottom stage. And the last time we're seeing that low of a valuation, if you look in terms of even weekly chart itself, there will be like the year 2015. So you can see how long that is. That's like 7 years ago. So definitely let's see how things goes. I do see this as a potential capitulation, but of course, the recovery for this would potentially take quite some long, perhaps 2 years, 3 years, or even longer. So not necessarily a good point to add in, but let's see how things goes. And what I mentioned, because of how fundamentally China's stock market works, equity market works compared to US, I'll definitely be looking to allocate less, not to say that it wouldn't recover, but I'll say that overall it'll be less attractive as a longer term investment because of the higher volatility in mind and of the gains that could potentially be the volatility that I'm stomaching is comparison to what I'm facing in crypto. But on the other hand, the gains would be only comparable or slightly better off if you compare it to the US market in that sense. So for me, for the potential risk that I'm going to be experiencing in the China stock market, I actually prefer to use the cash that I have to invest in the crypto market itself. So that's my alternative to it. So generally, the reason why I still keep investing in terms of US market wise is simply because of the fact that they do have less volatility in comparison to the crypto market itself, and the gains wise is still relatively attractive within the range of 8 to 10% if you're looking at S&P 500 over the last 20 odd years or even 30 odd years in that sense. So yeah. And then finally for Bitcoin itself, we do see a much needed relief rally, but bear in mind we still have this 20 exponential moving average on the weekly chart, which is currently at 44K itself. So we do definitely want a strong break above that, which should also coincide with the consolidation pattern over here. That will form an ascending triangle itself. So we could consolidate much more here to even April itself, or potentially towards April, of course, even towards May. But generally, when you have ascending triangle, it would typically form not that to the apex itself, but rather to around here, which will be around the end of March or even early to May at most. So let's see how things goes. Perhaps you could break towards the upside, or if we do trend towards the downside and break below, we could definitely see a much potential sharp drop just as well. All right, so otherwise, that's more or less about it. If you guys have any questions, feel free to drop by your comments below. I did mention the potential long setup. Now I mentioned the break above the 20 exponential average was too strong, so there wasn't an opportunity to get if you're looking at a forward chart. Whereas if you're actually monitoring it on a shorter time frame, then that could perhaps be an opportunity. But yep, it is what it is. So I'll just stay put and then keep a lookout for any pullbacks and nice retracement support before entering a long setup. Otherwise, that's more or less about it. If you guys have any questions, feel free to drop your comments below. And I'll see you guys tomorrow. Take care. Bye-bye.